Yes, you've read that correctly. Inflation is your secret ally as a property owner and a property investor. Why is inflation your friend? We're going to look at a little bit about inflation at a surface level, then we're going to look at how it correlates to property ownership and investment ownership and how that helps us as property investors. What is inflation? Inflation is the rate at which the price of general goods and services increases over time relative to your dollar's purchasing power. So inflation means that prices increase over time. Your money purchases less than it used to. And the example I like to give is a Happy Meal, a 3-nugget Happy Meal with chips and a drink. Back in the day, 10, 15, 20 years ago, it used to be $3.95. Now, the exact same Happy Meal with 3 nuggets, chips and drink costs $9.95. What's changed? Nothing. Inflation has made the cost of that Happy Meal increase over time, but the amount of nuggets and chips you get has remained the same. How does inflation come to be? Well, central banks increase the money supply and circulation within an economy, within any given economy. And they use monetary policy to manage economic fluctuations, such as interest rates rises, interest rate cuts to stimulate the economy, and so forth. Central banks adjust the supply of money or credit by purchasing assets like government bonds. They then create money in the form of electronic funds. Money is not always physically created. It's generally these days done by digital and electronic funds. Money is then entered into the economy through banks issuing loans against securities, and in our case, assets. So because we live in a fiat currency system, meaning that the money is actually backed by nothing, which is a crazy concept for a lot of people to understand. Our money is actually backed by nothing. It's just backed by trust that the government will guarantee that that money is what it says it is, after President Nixon took the dollar off the gold standard in 1970s. Real money is actually debt, and I'll get into that a little bit more later on. So there are some important benefits of moderate inflation, guys. Inflation is not as bad as what is made out in the media all the time. Inflation actually encourages money to move around the economy. Inflation is a key driver for people to spend money, to invest money. It helps businesses grow, helps businesses hire people, create jobs. It actually discourages people from hoarding cash. Now you imagine if there was no inflation, there would be no incentive to actually invest and to buy things. People would hoard cash because it would sustain its value. It actually reduces the real burden of debt. I'll get into this. There's another crazy concept of inflation that we're not taught at in schools and the media doesn't touch on. The debt actually loses value over time with inflation, and it keeps the overall economy moving forward. Now, if inflation is too low, spending gets delayed, economy slows down, debt becomes heavier, means that prices don't rise and your burden of your debt feels heavier. Wage rigidity, so wages stall and don't increase because the economy is slow, people aren't spending money, businesses aren't making money, so why are they going to pay you more? Now on the flip side, if inflation is too high, purchase power falls quickly. So people can afford fewer goods and services because the purchasing power of your dollar is falling. There is higher uncertainty in the market, there's less investment, meaning slower growth, workers demand higher wages, erodes your savings and the dollar value. So we can see here that moderate inflation is good. If inflation is too low, if inflation is too high, then we have issues in the economy. Now I want to quote Robert Kiyosaki when he says that savers are losers. And look, to an extent, I agree with that. Don't get me wrong, it is important to have a savings buffer in your account. It is important to have cash buffers for your investment properties. But saving for the sake of saving, sure, it might give you a false sense of security. Sure, you might feel like you're secure, you have all this money, and you're well off. But are you really? We are in a fiat currency, so money is actually fake. It can be created limitlessly by central banks and banks. So you have $100,000 in your account in 2026, no problem. In 2030, that same $100 showing on your account will be able to purchase you less than $100,000 can purchase you in 2026. Another crazy concept, and that is inflation eroding and eating away at your purchasing power of your dollars. So investing in real estate is actually a hedge against inflation. So when you invest in real estate, inflation is actually your friend and it actually makes you richer, and I'll explain why. Why do we as investors like inflation? Inflation makes property prices rise over time. So ultimately, let's say as an example, you buy a house in 2015 and in 2025, that house has gone up 20, 30, 40, 50%. Now, yes, there are other factors at play. There are other supply demand metrics. There are the migration, immigration, internal migration. They all factor in. But inflation also plays a part. Why? Because it takes more dollars to buy that same property. Your rents also increase over time. So if your debt stays the same, or if it reduces, and the rents are increasing over time, the outcome for us as investors is an increasing yield. And we investors are always chasing a better yield. So whether you're on an interest-only loan, where your debt remains the same for a set period of time, or you're in a principal interest loan where your debt actually decreases, you are still winning, and inflation is still helping you get richer because it will still take more dollars every year to buy that same property. So what does it do? It increases your equity, and as your equity increases, as an investor, you can draw that equity out, leverage into other assets, and continue to grow your portfolio. So inflation and debt leverage. Inflation reduces the real value of debt, and I'm going to give you an example. And this is a crazy concept that some people just never understand, and some people, once it does click in their brain, it blows their mind. So if you bought a property for $700,000 and you owed $700,000 on the mortgage. Now let's say that same mortgage balance of $700,000 in 10 years time was still the same. That $700,000 in 2036 would look relatively cheap, as wages would have risen, rents have risen, and values have risen over time, even if you are on an interest-only payment for your mortgage. So that means your LVR, your loan-to-value ratio, has naturally increased over time due to inflation. Again, there are other factors at play, supply, demand, but inflation will also play a big part in that, and your LVR will naturally increase over time, even if you never dropped a dollar off that $700,000 mortgage. So your debt remains the same because your currency is devaluing. So in 10 years time, your repayments on $700,000 is going to feel light. It's going to feel, wow, this is easy compared to everyone else now paying $1.5 million for a standard mortgage, or $2 million, or $2.5 million. So your good debt, which is secured by assets, that debt decreases over time as your asset value increases. Guys, I can't overstate this enough. Leverage, leverage, leverage. As property investors, leverage is one of our biggest weapons, our biggest tools, our biggest levers that we can pull, and the debt is eroding in real terms. How do we as investors then position ourselves to take advantage of this? Well, price appreciation in real estate. We position ourselves buying good quality property in good markets. We allow for wealth to grow over time, aided by inflation. The same house in 5 or 10 years time will need more dollars to purchase in the future. So again, you purchase a $500,000 house now, all things remaining even, and inflation growing at a certain percentage year on year, you will need more dollars to purchase that same $500,000 asset. So if you own that asset, someone will need to come to you one day and pay you $600,000, $650,000 for that same property because inflation has eroded the currency. So your debt remains the same as values increase. And guys, remember this, inflation rewards asset owners and it punishes savers, which is such contrarian thinking to what we've always been taught in our lives and at school and by the media. Save, save, save. Inflation erodes your savings and it rewards those that are asset owners. So my final thoughts on this: use inflation to your advantage as a property investor. Inflation is normal and it's an important part for any economy. High inflation is bad, low inflation is bad, but moderate inflation is actually good for any economy. Guys, we are in a fiat currency system. Our money is actually backed by nothing except for trust in the government. We trust that the government will honor the currency that's in circulation, but it's actually backed by nothing. Real estate is an awesome asset class to hedge against inflation because if you park a depreciating currency into a piece of real estate, that real estate is going to grow over time because as your currency devalues, someone is going to need to spend more currency to purchase your house or to rent your house. And that is why real estate is such a good hedge against inflation. Let inflation, along with supply and demand metrics and other metrics, allow you to create wealth. Let it allow you to leverage into other assets. Let the value of cash reducing year on year allow the value of your properties to appreciate over time. And finally, get educated, guys. Don't just watch my 10-minute video at a very surface level and think you know everything about inflation. Get educated on it. If you want to be a serious investor and create serious wealth, use the system. The system is designed to reward people who hold assets. Use that to your advantage. Inflation can help you create wealth. It's not all doom and gloom. Don't listen to the headlines. Guys, till the next video, take care. Thank you very much.